Now it's, oh my God, that the situation has just changed so dramatically. When there's no new information, it's just that the price changed. And so all those things that were positive in your mind get you to buy more Bitcoin at 110, 125, 150, right? And so we just run. So that's the, this human psychology and how markets work is why I think that we run to those sorts of levels very, very quickly. And then have a pause. I'm more focused on Bitcoin right now because that's what everyone owns. The people who are afraid of a bond market meltdown, who own a lot of bonds, the large institutions of the world, now they have this Bitcoin ETF and they can buy it and they can express that fear in terms of buying Bitcoin. And if the price keeps rising, then it just confirms that, oh shit, something's happening. It's not just going away. It's not just high beta NASDAQ, right? So, or it is high beta NASDAQ and it's crushing the NASDAQ this year. And guess what? I can join the train. I can join the party.
Arthur Hayes' criticism of the global financial system is unreserved. Without continuous money printing, he said, markets would collapse, with stocks, bonds, and real estate all plunging. He contends that despite being aware of this reality, Republicans and Democrats decide to use different political strategies to maintain the status quo. The true agreement in politics? In order to sustain tax revenues and meet the demands of the wealthy elite, markets must continue to be inflated. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
I think we can go, we go through 110,000 and then so we sort of run until in the 150 to $200,000 range. I think that could happen between now and sort of like early July of this year. And then I think sort of the next decent correction, and that maybe is a 15 to 30% correction, I don't know, will be in August. Between late July and late August, because what has Trump done essentially? And, as a trader, I love it when politicians put these binary outcomes because then it focuses all attention on these dates. And then I can almost certainly know that there's going to be something that's going to happen. And usually volatility in the first instance isn't great for what you own. So you want to be sort of de-risking. So what do we have in late July through, and I say the pivotal date here is a Jackson Hole symposium by the Fed, where I think they're going to, radically change what they're doing. But so end of July is the first X date for 90-day tariffs for everyone except for China. So how many deals is Trump going to have announced? And if he hasn't announced a lot of deals, is he going to ratchet up the pressure on the tariffs to those who didn't come to the table? I think yes, because that's his negotiating style. He wants to get a little bit more juice to present to voters in 2026 about how amazing the Republican Party has done at this campaign promise of reducing the imbalances. So I think Trump goes a little bit more maximalist pressure into these dates, maybe even goes over them because he's like, okay, well, the markets are already up on the year, so I can afford to have things decelerate a bit if I go a little bit hardball on the tariffs after this 90-day extension. So I expect a lot of volatility. I think it's in middle of July, whenever that is the rest of the world. And then China is, I think, August 12th is when their extension expires. So again, a lot of volatility. Trump saying, no, we're not doing a deal unless it's very good for America, yada, yada, yada. The market's freaking out. Oh my God, they're not going to do a deal. And so we go back to sort of the April 2nd to, that week sort of volatility in the markets. And then we have the debt ceiling. So, assuming that there's no sort of bill passed to fund the government, and the debt ceiling raised, that's essentially when the market is saying that the Treasury will run out of extraordinary measures to fund the government in the mid-August period. How do I come up with that date? You can look at the T-bill market and the term structure, the interest rate curve, and look at for kinks in the market because of how the rules are around money market funds and how they have to mark their books. They can't have a bond that doesn't get paid. It reduces, it might have their NAV go below 1, and that's sort of regulated as very, very bad. And so they don't want to own those bonds. They believe are could expire when the Treasury can't pay them back. Now, everyone believes that the Treasury the debt ceiling will ultimately get raised. So you're going to see a kink in the yield curve. And that's when you would say, okay, that's when the market says there's going to be the exit. And that's right now is around mid-August. I think it's just FOMO, right? So, we hit the 110, went down to, depth of, oh my God, the bear market's over, we went down to 70 something thousand. And then, the people Bitcoin's never going back above 110. That's it, right? So then it hits 110, then fucking on high volume eclipses that. That means it's game on, right? And then we run. And it's not based on, any major new fundamental change. It's the same thing. Everyone believes they're going to print the money. And so then all the confirmatory biases start being, oh, the US government's going broke. Oh, they got downgraded. Oh, look at the deficit. Doge isn't working. Oh, this, oh, that. All these things that already happened that you could have bought Bitcoin at 74,000. Now it's, oh my God, that, the situation has just changed so dramatically. When there's no new information, it's just that the price changed. And so all those things that were positive in your mind get you to buy more Bitcoin at 110, 125, 150, right? And so we just run. So that's the, this human psychology and how markets work is why I think that we run to those sorts of levels very, very quickly and then have a pause. So if you take that buying power out of the market, then stocks crash, bonds crash, property crashes, unless they print the money, which is obviously where we want to know as crypto holders or Bitcoin holders is when they're going to print the money, why they're going to print the money. So this is why they're going to print the money, because they're very, Democrats and Republicans are very on this. We need to rectify these imbalances. The rhetoric is different depending on who's in charge, but the intent is the same. It's going to happen. And so, okay, well, neither party can tolerate the financial markets declining in value because, number one, there's a lot of taxes to be made from those, and all their donors are rich, and that's what they own. So they need to make sure that they're protected. So what do? They're going to print the money. And so that is how we get to $1 million Bitcoin, is capital controls, forcing foreigners out of the US. The US saying, okay, great, we don't have the foreign money. We'll just print it instead to keep our markets afloat so that we can charge taxes and afford, this welfare state that we've created for ourselves.
Arthur Hayes warns against blindly chasing altcoins, stressing that we're no longer in the 2020 market, where almost any token could skyrocket. According to Hayes, most projects today won't make it. He believes only a small number of tokens with strong fundamentals will succeed those with real business models, market demand, and actual revenue. To sum it up, Hayes says, cash rules everything around me. As an investor, that's what I want to see. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I mean, obviously ETH had a good run, but it's still 25,000 at a level of Bitcoin. And then the Bitcoin ETH ratio is still not great. So, to really get all dominance going down, you really need ETH to rally. And so we'll see if that happens. But, I'm more focused on Bitcoin right now because that's what everyone owns. The people who are afraid of a bond market meltdown, who own a lot of bonds, the large institutions of the world, now they have this Bitcoin ETF and they can buy it. And they can express that fear in terms of buying Bitcoin. And if the price keeps rising, then it just confirms that, oh, shit, something's happening. It's not just going away. It's not just high beta NASDAQ, right? So, or it is high beta NASDAQ and it's crushing the NASDAQ this year. And guess what? I can join the train. I can join the party. And so that's why I think Bitcoin dominance probably either stays flat or increases if we don't go on this run. I think altcoins really come into the space sort of like later in the year once we get into the meat of the rally. So we have all these things happening around then. So I don't want to own a lot of risk from late July into the Jackson Hole symposium. And so then we get to Jackson Hole. What do we expect from the Fed? If markets are crashing because Trump is trying to get a little bit more juice out of these tariff negotiations, ultimately they'll go back to status quo. We know that's what's going to happen because they can't take the volatility. Then we get the setup for Powell to do supplemental leverage ratio exemptions. We set the stage for Powell to announce that he's ending quantitative tightening, but the receipts from maturing mortgage-backed securities will be buying treasuries. He's already said that they're thinking about that. So I think those two things could be on the table to be announced at Jackson Hole. And then we get just rip-roaring markets from then until the early first quarter of 2026. I think people are getting a little bit more discerning. Now, that being said, I don't know what the new piece of shit narrative is going to be.
You don't know
what it is? I don't know, but hey, I'm a trend follower. If the trend is your friend until it ain't. So I'll be trend following. I'm momentum trading the shit out of that. Whatever it is, I don't care. It doesn't matter if it's complete fugazi. We can believe something once.
It probably will be a complete fugazi. So,
but like the stuff that has already launched, the question is, okay, we've done this altcoin season like 3 times now, or 4 times, whatever you want to count it. Okay, where are your clients? Are they actually paying you real money? If they're paying you real money, where's my fucking cut as a token holder? And so I think for any coin that's not new, that's what we're going to be asking ourselves. And there's very few projects that have real clients, pay them real money for product and service, and the benefit of that goes from the protocol to the token holders. So hopefully ETH sort of catches a bid and we sort of get this DeFi resurgence, but it's not going to be all the dog shit DeFi that went up in 2020 and 2021. It's going to be stuff that has, as I say, fundamental season, real cash flows. Cash rules everything around me. That's what I want to see as an investor, as a token holder. And I think we're really going to be rewarded. And I think we've really seen that narrative starting to play out. Obviously I'm an investor and advisor of EtherFi. It was down to like 50 cents, 40 cents, whatever it was, pretty much the lows that it had been at post its token generation event. Thing has rallied almost 3x from those lows. ETH only went up 50%. Bitcoin only went up 30%. Why? Because they've got real cash flows. They're doing token buybacks with 5% of revenue. People are like, oh, okay, well, this is a real project. China is busy, dealing with a debt deflation trap, and they're not printing enough money to get themselves out of that by choice. And so even though the fiscal deficits are massive in China, it's just not enough to get things really, really going. So they're kind of out of the picture. We'll see what happens with Japan and what the BOJ does in June. I'm not sure. EU is irrelevant right now. And so it's really all, the show is, it's the Trump show. And think about, by the fall, it's almost 1 year out from midterm elections. And Trump needs to start showering goodies on the Republicans to get reelected. And so it is it's full send time for the economy to start going gangbusters. And what does that mean? You need to give credit. That is what the US economy is based on. It's credit. And so that is supplemental leverage ratio. That's treasury buybacks. That's ending the conservatorship of Fannie and Freddie. There's all these sorts of things that they can do to increase the credit into the system to start juicing at least financial markets to start with. And that's why I think the fall is when they really need to start getting going, because they only have 12 months. The Republican legislators need to start campaigning on what did you do for me lately, is what the voter is going to be asking. And so I think all this talk, all this doom and gloom, that's out the window. It's America's the best place in the world. Look at what we did in the first 100 days. I'm fucking amazing. We beat back China. They fucking bent the knee. We did the deals in the Middle East, all these sorts of things, right? Maybe there's a recession, maybe there's not. I don't really care. It doesn't matter. I just know the money needs to be printed. The markets need to go up because the party in power is getting reelected. In the same way that the Democrats did the same thing with, Fed cut rates for Kamala Harris. Unfortunately for them, she lost, but it's the same playbook at the end of the day. That playbook really starts in earnest in the fall. And so that's why I think that's when we get the real juicy, just like day after day of just green candles everywhere across the crypto ecosystem.
Arthur Hayes provides a thorough examination of the state of cryptocurrencies today, paying special attention to Ethereum and Bitcoin. He starts off by admitting that Ethereum has performed well, but he still believes that Bitcoin is the leading player. He points out that the ratio of Ethereum to Bitcoin is not looking good right now, and that a big rally would be necessary for Ethereum to make a serious run. Since Bitcoin is still the asset that the majority of institutional investors own, Hayes stresses that he is currently more focused on it. These big investors are using Bitcoin as a hedge, especially those who are worried about a possible collapse of the bond market. They can now more easily become exposed to Bitcoin thanks to the introduction of Bitcoin ETFs, and as its price increases, it validates their concerns about the established financial system. As the market rally continues, Hayes predicts that Bitcoin's dominance will either remain unchanged or grow. According to Hayes, altcoins will probably have a bigger influence later in the year as the overall market rally picks up steam. He notes that China is less relevant in the current market because it is trapped in a debt deflation trap and isn't printing enough money to address the problem. He adds that Japan's future actions are still up in the air and that the European Union is currently essentially meaningless. Hayes then turns his attention to the American economy, forecasting that there will be a significant push to expand credit in order to boost the economy as the nation gets closer to the midterm elections. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.